short review on today's PM session. So today was a high resistance PM session. We noticed how today's price action was an inside day candle, and that means that we are inside the previous day candle, so we didn't go more than the extremities, and that makes it more difficult than usual. This is also anticipated because we are in a short week, so it's going to be Easter. So Friday and Monday it's off. And tomorrow we also expect Powell to talk at the PM session. And that usually creates a lot of consolidation and choppy price action. So we can see it in the day before as well. And I expect that to happen tomorrow during Powell's talk. So more difficult to trade. So the nature of the day is also confirmed by overlapping opening range gap. So if we look, if we toggle from electronic to regular trading hours, and we measure the gap from the previous day's close to the current day open. So these are the what I call RTH gaps. We see that they are overlapping, and when that happens, it means that it's more like a high resistance environment. And this is also like, notice how today's RTH Tuesday, it's inside Monday and it's inside previous Thursday. And the candles are like overlapping each other. So price is not allowed to move freely, which makes it way more difficult to trade than on the days when we have low resistance liquidity runs, when there is like big fair value gaps and they don't get completely filled. So knowing that, it's better to have a lower risk on these days. So today I came at the charts around 3 p.m. So I was looking to see if I can get a trade in the 1515 macro and in the 1550 macro, meaning this one. And I did take a loss. I mitigated it with a few handles. But yeah, this further proves that it was not an easy trading day. I have observed some setups that I will show now. So if we look our ranges, so the previous 3 days, first the previous day, Monday, I put the range in black. You can see it here, 25, 50, 75, and high and low. And the last 3 days, so we have Thursday was actually like the highest, so it takes both the high and the low. And if we transpose that on the 1 minute chart, so here, so we have the PM range today, so between 1330 to 1400. So this was the low, this was the open at 1330, 25, 50, 75, and the high. And here was a nice trade I have observed. So during the 1315 to 1410 macro, so during this time, notice how we have like a mitigation block after price has touched the 930 open. And this also makes the PM range high. And here we form this fair value gap here at 1351. That gets tapped at 1400, touching also the AM range low. So this is between 9:30 to 10 a.m. And we have the first fair value gap. See how it gets respected here as an inversion fair value gap after it tapped this one. It's not so nice that it went like a bit above it, but in the same time we see how the bodies are in the lower half and mostly like below the fair value gap. And then when it comes up here, acts as an inversion level, and then we have this relative equal low. So there is liquidity resting here, and it comes and takes it at 14, 13. And price goes higher. We have this 15 minutes fair value gap over here, annotated in blue from 1430. And then we see how price makes this relative equal lows in the first fair value gap. This again shows like high resistance. In a low resistance condition, it should just come down once, tap it, and then just move one direction or another. But here it just keeps coming back and forth, meandering around. And this makes it very difficult to hold the bias. Nonetheless, afterwards, we come up, and this was interesting here. Like we see it goes into a premium level, but it doesn't take this high. So it leaves like relative equal highs. And this is the 50% level of yesterday. So if we take again the daily, we see how previous day 50%. So here it goes into a premium, and notice how the bodies are respecting that level. So this was one of the frame that I had for this relative equal highs. I thought it can go up here because it's like some liquidity, then take this one. And here we had like a 15 minutes fair value gap. So it would be this one over here. And I was anticipating a long in this. Before it went to like this 15 minutes fair value gap. So when it was here and then at 1550 we got this big candle up. So I was anticipating it might come here. I knew this was risky because here is also like a premium level. So at the same time I don't want to see it come back here if it respects it. So price would just go into a premium first and then will come down for liquidity. So it was like a 50-50 chance. But I just traded with 1 micro, so I assumed the risk. And this was the trade that I took. So first I took 2 trades. So first I entered long here at 973. And I was looking for price to come over here. So I spent in the trade like, so here I enter 73 and I close it at 61. So I was in the loss of like 12.5 handles. But before I was in the loss, I saw price move in my direction. So from 73 till 89, that's 15 handles. And here I felt like my mind was screaming that take something off. And this is also like what ICT discusses sometimes. There are 2 types of capitals you're trading. One is the actual financial capital and the other is the mental capital. And the mental capital is the one that you should protect the most because that shapes you as a trader and it can scar you as well. It can make you tired. So it's good to take something off when you feel like you need to, when your mind starts screaming. So yeah, but that's a lesson, I think. So this was a lesson for me to take something off, especially in this type of conditions. So yeah, price went here and notice how the bodies are staying in the lower half. And then it came down and I closed the trade over here at 61. So I was in a loss and I spent like from 52 till 59 was 7 minutes. Then I saw price come over here in this fair value gap and the bodies are above it, respect like only the wicks come here. And I thought, okay, maybe let's take one more shot here to go for the long. So I entered at 65 over here and I wanted to see if price can come above it. But it didn't really keep me meandering around, back and forth. So I was like, okay, that's fine. I need to protect my mental capital. So I exited the trade. So in the end, it was like 12 handles loss minus 3. So it was a 9 handle loss day. So I was okay to just close for the day. I don't have much expectations going forward this week. As we can see, it was if I go back to the new week opening gap, we see how we are just, yeah, going back and forth in this new week opening gap. So we made like this high on Monday, see how the bodies are like respecting it. And then we make the low here also Monday, and now we're just like consolidating around. So let's see if we can get some trade tomorrow. I don't trade morning sessions, but I do expect like there might be some good trade setups, either in London or here in the New York AM session. I don't expect I expect very high resistance runs when Powell speaks. So I probably will just observe tomorrow afternoon, maybe just do some demo. And then Thursday there might be some trade, but caution is advised here because we're going into holidays afterwards. So price might not be allowed to move so much. So yeah, this is the review for today. Hope you find this one insightful, and talk to you soon. Have a good night.